Hey everyone, and welcome to the LizardTrader webinar this week. We had a launch event earlier with the Shark indicators featuring a new indicator that we have just introduced, the auction bars. So although the topic for today's webinar was how to create better trend filters with rolling pivot and Veve App levels. I think we'll focus on auction bars today, and there will be a little bit of information about these rolling pivots and Veve Apps as well. So I'll go over that during the webinar too. All right, so presentation today will be about 40 to 60 minutes, depending on how I do on pacing the slides here. Have quite a bit of material to cover, so we'll not take questions during the presentation. If you have something that come up along the way, something that you wonder about, just go ahead and type it into the chat box here, and I will get back to it via email after the webinar. All right, so as I said, we just launched the auction bars, a new tool this week that will help identify high probability reversal patterns. So what I'll do first off here today is just to give a quick introduction to what this is all about, and then show how it can identify opportunities with favorable risk-reward ratios around higher time frame ranges and key support and resistance levels. So my biggest challenge in holding these presentations is usually to keep it balanced. So I hate to overwhelm traders that are just starting out with too much information. But on the other side, if you're experienced, there's nothing worse than watching something that's just superficial and with no meat to it. So with that in mind, I'll do my best to make this worthwhile for everyone. So as I said, there will be a Q&A session towards the end. So if you have any questions, just go ahead and type them into the chat box here. All right, for those of you who are not familiar with the LizardTrader team, that's me to the left. I'm Chris Lassen, and I'm the co-founder and CEO of LizardTrader. I have a background in system trading from my previous company, Sentitrade. We did sentiment analysis of financial news stories and delivered data to institutional traders and providers of managed futures systems. So during that time, I really got a good overview of how institutional traders think and execute in the markets. And then we got bought up by a Swiss investment company about 2 years ago, and I started LizardTrader with Harry soon thereafter. And as you can see here, Harry is our market lizard here. Many of you will be familiar with his work under the Fat Tails handle or nickname that he uses over as futures.io, or what used to be Big Mike Trading. He's also a very well-known contributor in the NinjaTrader support forum, known as Harry over there. And yeah, just all around a very well-respected figure in the community here. And he's programmed some of the most downloaded indicators for the platform, including the tools that we're presenting here today. All right, so I said the auction bars is our new tool that we're introducing this week. So this defines high probability reversal patterns. So I'll just first go over the basics on what this is all about. So key reversals, outside bar reversals, and spike bars. And we'll then have a look at how to define reversal bars. For example, how large the upper or lower shadow of a spike bar should be, and look at additional conditions concerning average range volume for the bars preceding these reversal bars. And we're also going to look at how to filter patterns, these patterns around higher time frame ranges and key support and resistance levels. So what we're talking about then are pivot and Veve App levels specifically, and how to use them to locate institutional buy and sell levels. So towards the end, we'll also have a special introductory offer that we are featuring right now with the auction bars. There is a discount on the auction bars as well as on our indicator package. And for those of you who are not already an owner of the Bloodhound software, that is a tool that can help you create and test strategies without being a programmer. So it's a visual programming tool. It's really, really good for getting started with the system trading. So if you don't have that already, make sure that you stick around until the end, as there will be a Bloodhound license included with the purchase of our indicator package here today. So before we get going, I'm just going to add our customer disclaimer here. It's saying that trading is associated with considerable risk, so please make sure that you understand that and keep in mind that the results from the examples that we'll go over here today are hypothetical and not based on actual performance. So I think one of the most used lines in the trading community is that the trend is your friend. So a classic trend following approach will be going long on a 20-bar high, for example. So you get into the market at a breakout level, and then you try to ride this along with the trend. So it's very easy to understand and straightforward to execute. But a major issue with this approach for day traders is that there will be extended periods of non-trading markets. So most of the time, markets are range bound, some 80% of the time. So you will see a disproportionate high percentage of losing versus winning trades, and the winning trades will be much bigger, much more profit than compared to the individual losses. But yeah, this approach is really challenging for day traders of single futures markets, and it's more appropriate for a well-balanced portfolio. So an alternative approach is following a hybrid system. So you look for reversal bars that are aligned with the overall trend, and that will minimize your risk and help you get more out of trend moves than by following the traditional breakout approach. So in order to do this efficiently, we need a reliable, non-lagging method to identify reversals, and we're going to make a distinction here with respect to reversal and spike bars. So spike bars are basically about the geometric makeup of one bar. So we're looking at the upper or the lower shadow compared to the body of the bar. And for reversal bars, we're looking at where the current close is relative to the previous bar. So we then look at two bars. So these are bearish and bullish spike bars. So spike bar is made up of a small body with a long shadow. They're very easy to identify on the chart, and therefore a lot of traders will act on them. And basically what they tell us is that prices were rejected at a certain level and that the market pushed back up to where the candle opened. And yeah, if this pattern occurs at the end of the move, we can assume that momentum is getting out of steam and that it could reverse. So although they're really easy to spot visually, we need to define the requirements for being a spike bar. So it should also have a significant range or volume. So it should be average or above average. And as you can see here in the indicator dialog box, you can specify the parameters for the range and the volume filters here. So you can say that the reversal bar should have a certain volume or a certain range when compared to the immediately previous bars. And the same goes for the shadow size. So you can compare the body to the shadow and say that the shadow should be at least percentage X, in this case 70% of the previous average bars And then we also have a swing strength definition, and that relates to that the bar should mark a lower low than compared to the last 5 bars in this case. So you can set it to 10 or 15, of course, as you like. So there are many additional options here as well, but I think that's perhaps a little bit too in-depth for what we have time for here today. So I'll just focus on the main features of the auction bars here today. We'll also talk, as I said, about the reversal pattern. So a reversal bar also shows us that the price is being rejected at a certain level. As we just saw, spikes are mainly about the geometric makeup of one bar, whereas the reversal bar looks at also the current close comparing to the previous bar high, low, and close values. So we therefore need 2 bars to find this pattern, and it's not as visually obvious as the spike bar. So let's just have a look at the 3 types of reversal bars that we have defined in this indicator. So we have type A, which has a higher high and a lower close compared to the previous bar. This will be the inverse, of course, for a downtrend and a reversal up. So type B is a outside bar. We then have high and low points that are outside the previous bar, and we see a close below the close of the previous bar. And then we have type C, which is even more restrictive. You have, again, an outside bar with a close below the low of the previous bar. So as I said, type B and type C are outside bars with high and low points outside the previous bar. And yeah, type B only needs a lower close, and type C requires a close which is below the low point of the previous bar. So let's have a look at how this shows up in the chart with the auction bars. So here we have a reversal type A. We see a lower low and then a higher close. And in this case, we have also a reversal type A. In this case, it's a reversal down bar that doesn't lead to much, but nonetheless, we see a higher high and a lower close. So it fulfills the requirement for being a reversal down. And then we have type B, a reversal up, a outside bar with the high and the low of this bar being outside of the previous bar again, and this time with a up close, so a higher close than the previous bar. And this is a reversal down type B pattern, and we again have an outside bar, and this time with the lower close. And then we have type C, a outside bar again with the close plotting below the previous low, and for the upside again outside bar, and this time a close above the previous high. Now in this indicator we can choose between the different reversal patterns that you want to display. So obviously type C is the most restrictive, whereas A and B will allow for more setups. And you can also choose to display reversal bars or spikes, or just spikes bars, or require them to be both. So as with spike bars, we can further qualify the bar, what the bar pattern should be like. So we can add requirements for swing strength. So say a higher high or lower low than the last 5, 10, or 15 bars. There's a zigzag filter integrated in this indicator to keep track of this. So you can adjust depending on the time frame or market that you're looking at. And you can look at the range or volume specification. So you can say that it should have significant range of average or above average compared to the bars included in the reference period. And you can say that the reversal bars should show up at key support or resistance levels. So one way of defining those higher time frame support and resistance levels is simply by plotting what we call the auction ranges. And these are these horizontal lines that you see plotted on the chart here. And as I mentioned, markets are ranging some 80% of the time, and then suddenly there will be a breakout. And what the auction ranges do for us is really to keep track of this. So there's a secondary time series added to this indicator to keep track of this. So once there is a close outside of this this range, then a new plot is started and a new trading range of the last 60 minutes is starting to paint. You can, of course, choose different higher time frames, so you can go with a daily range or a 30-minute range, whatever you like. And the idea is simply that if a reversal plots at the edge of one of these lines, will be positioned for trades with more favorable risk-reward ratio. So in this example, we have a bearish reversal bars in the NASDAQ E-mini futures contract, 5-minute chart here. And the swing strength, as defined by the zigzag filter here, confirms that this bar had the highest high of the last 5 previous bars. And we then saw a lower close than for the previous bars. So the requirements are met for being a reversal bar type B. Again, in the indicator dialog box here, we can choose the bar period for the auction range. As I said here, we have 60 minutes, but we can also go with a shorter or a longer time series here. And we can also choose where and how to filter the reversal bar. So you can say that they should only appear in the ranges, at mid ranges and the ranges, or outside the range. And you can also turn this feature off completely. And again, as you see here, there is a zigzag filter included with this indicator, keeping track of the swing strength primarily. And you also see the indication here of this reversal bar is a DT for a double top, so it keeps track of that as well, and it marks higher highs and higher lows, and lower lows and lower highs. And along with the points here, you see the points traveled in the last swing, as well as the accumulated volume for that swing. So that's what the additional numbers are telling us here. All right, as for entries, in a bearish reversal, we'll have a confirmation of the signal once the price moves below the low of the setup bar. The confirmation bar has to occur within a specific time window. So for example, the last 3 bars from when the reversal bar plotted. We then, if we see a lower low, take out the setup within these 3 bars, we can open a position. And it's opposite for long setups. We need to see the price move above the high of our setup bar to confirm the signal. And again, this has to occur within a specific time window that you can choose in the indicator dialog box. And as I mentioned, other than filtering reversal bars at these auction ranges, they're also very effective when used in connection with key support and resistance levels. So for those of you who are familiar with LizardTrader, you'll know that I'm going to talk about pivot and Veve App levels from now on. This is really mainly about understanding the concept of execution costs, because from a institutional perspective, a major challenge is to minimize market impact when submitting orders. So positions are divided into many smaller orders using market value to obtain the best possible price. So a recent survey showed that almost 60% of institutional investors use volume weighted average price to do that. That's what we call the Veve App. And therefore, you want to look at reversal patterns at these price levels. So if you're not familiar with the volume weighted average price, I'll do a quick intro to that right now. That is basically a volume-weighted arithmetical mean of all transactions that take place over a defined period. So you can calculate the Veve App or the volume-weighted average price for all instruments as long as you have price and volume data available. And what we see here is a Veve App chart of the E-mini S&P 500 in a 5-minute chart. This is a daily Veve App, so it's anchored here at the beginning of the session for which the transactions are being recorded. So the calculation starts with the current trading day and ends with the last transaction prior to market close. And during the day here, the Veve App will gradually stabilize, and the more weight it puts on, the more significant it becomes as a benchmark, and the more reliable it will be for us as a technical trading tool. So we use the first standard deviation bands to represent a value area here. Statistically, 70% of all transactions during the day take place in this area. So we're likely to catch new trends early on. If we look for setups here, institutional traders are looking to execute as close as possible to the Veve App. And by knowing whether they're likely to participate in the market action, will easier for us to spot setups with a favorable risk-reward profile. So in a downtrend like we see here, we're looking to sell when the price is retracing back up to the Veve App band or into the value area here, and then exits will be towards the second standard deviation band, because we know that statistically only 5% of all transactions will close outside this area. So down here we obviously have some oversold situation and reversal to the mean following that. So it's a good place to get out of any open positions. And what's really neat about this indicator is that it also plots the previous Veve App levels of yesterday's and that of 2 and 3 days ago. And as you can see here, the price is really reacting to these levels as areas of support and resistance throughout the day here. Let's see, we can show that here. You have price coming in from above here, testing this as support, and then breaking through, and from below coming up to the Veve App level of 2 days ago and failing the test, trying again, and then really starting a sell-off based on that. And you can see the same thing happened here in the European session, coming down, testing this for support, and then breaking through. And also up here, the Veve App of 3 days ago. So as you can see, these levels are really important meeting points for buyers and sellers, because mainly because these are objective and the same for everyone, no matter what type of chart or bar type that you use. The Veve App is really a objective price benchmark. So a lot of dormant higher time frame orders will be parked in these areas. So you want to make sure that you are positioned in such a way that you have the odds in your favor when the price is approaching these levels. So we'll get back to that in a couple of minutes. I'll explain further what I mean by that. First, I just want to introduce another and more traditional way of establishing market value, and that is the pivot calculation. It also produces price levels that are objective and the same for everyone. So before we had technical chart analysts and electronic exchanges, floor traders used this simple range calculation here, the high and the low and the close divided by 3 to find the daily pivot, and by adding a couple of formulas accounting for the volatility of the last session, we then get support and resistance levels above and below this main pivot. And yeah, so by taking the high and the low and the close of yesterday and dividing by 3, we get this main pivot here. And as you see here, we closed at a high point here yesterday. So in this situation, a consolidation was likely. And you see here during the European session, the price was drifting away from yesterday's close and high level, really towards the pivot range here. And at the open, there was a brief test of the main pivot from below, and then the market broke through to the downside of the first support level, gravitating towards the low of yesterday. And then there was a test of this first support level from below, which at that point was resistance, and then sell-off followed after a failed test. So as we see here, the second support marked the low point of the day, and then there was some buying pressure, and the market bounced back up to the low level of yesterday. So these price levels have really a long tradition, and a lot of traders will take profit and exit their positions around these levels. So that means that you want to buy support and sell resistance around these areas. That is statistically what will give you the odds of being at the right side of the market action. And so let's have a look at how this all comes together with the reversal patterns. What we want to do is to filter the trades by saying that if the prices move within a certain distance of pivot or Veve App resistance level, we're looking for reversal down patterns. And right here we saw a confluence between the daily Veve App, the main pivot, and the spike pattern. And then later on we saw a reversal A pattern in confluence with pivot resistance and the Veve App level from 2 days ago. And yeah, as I said, these are widely used and objective price levels, each one being uncorrelated of the other, as they're based on different price data. So what ends up happening here is that different traders' belief systems will line up, and by positioning ourselves correctly, we can then improve our odds for meeting our targets. So the reason this works is simply that the price levels are self-fulfilling prophecies, where a critical mass of traders respond in a coordinated way. And this is a really important point when it comes to technical analysis, because it goes to the very core of what it's all about. It's about using these objective and well-established and transparent price levels that everyone know about, not something secret or holy grail or some black box trading systems, because obviously that's not what most institutional traders and the trading community will look at. You need to put yourself in a position where you're working with price levels that other traders are working with as well, so that there can be an agreement as to what's going on in the market and what's likely to happen next. So let's have a look at some of the charts here for this week. So we had here a situation just off the open here on the 12th. So we had a reversal up just from the test of the pivot level here on Tuesday, and we saw a signal being generated from that. So I'll just do a quick intro here to what the Bloodhound template looks like. So if you're not familiar with Bloodhound, this is a quick intro to it. So these are the different rules that I've been talking about today. So these are the pivot price levels here, and then we have previous high and low points, and we have previous Veve App levels here, and reversal bars are defined in here. Market value by the Veve App is defined by this, and then we have the trend filter where the price is traveling compared to the rolling pivot and the rolling Veve Apps in here. So these are basically the rules that are creating these stripe signals here. As you can see, the auction bar comes with its own signals here, but these green racing stripes is when all the rules of the strategy come together. So what we have here is a reversal up signal, a lower low and a higher close on this one. And then we also have here a reversal pattern that forms over 2 bars. And then we see a confirmation in this bar with respect to the signal. So setting the stop loss in this scenario would be below the low of the signal bar, and our entry would be as the high of this bar is broken. So this is defining our risk for this trade. And I like to just illustrate this with some visual boxes here to make it easy to see. And then I want to compare this with the next key support and resistance level. And here we see have about 1-to-1 risk reward ratio to the next resistance level, and then have about 1-to-2 to the second support resistance level, excuse me. And what we could do here in this situation is to trade with the 2 contracts. So we could take one profit off here, and then we could reset the stop loss as this is moving in our direction and keep trailing it until the end of the session here. That would have been a really nice trade. All right, so can look at another example over here. This one was yeah, also a decent signal here. We have again, in this case, we have marked in the midpoint between the main pivot and the first resistance level. So if we look at how to manage this trade, we would have entered as this point was broken here, and the stop loss would be at the bottom or at below the low of the signal bar. And again, let's have a look at the risk reward ratio on this. And so we would have a 1-to-1 risk reward ratio towards the first, the level of resistance here, the midpoint between the first resistance and the main pivot. And we could have then set the remainder of the contract to break even and walked away with this from this with a nice little profit from that as well. So I've tested this concept in with the crude oil contract. But I've also just had a quick look at how this has worked for the S&P 500 E-mini contract. And this is trade from Monday. And again, we have a reversal here at the pivot level. And if we make this a little bit bigger, we can see what's going on here. And we see there's a bounce off this level up to the Veve App level of 3 days ago. And then it's gravitating towards the first resistance level. Doesn't quite get there, but by properly managing this trade, I think would walk away from this with also a healthy profit. So again, setting a stop loss for this signal just below the low of the signal bar, and our entry would be at the breaking of this level here. So point wise, we have 41.50 as a stop loss and 44 as an entry point on this, so 2.5 point risk. And then the next logical profit level, as we can see here, is this Veve App level about 3 days ago. And let's just put these boxes in here to visualize our risk-reward ratio on this. So we have about a 1-to-1 to the first target and about a 1-to-3 to the second target. All right. So I think that's it for the examples that I wanted to show here today. I want to move on and talk a little bit about the special promotion that we are having for this. It's a introduction offer for the auction bar. So I hope by the last 40 minutes or so that you have a good idea of what the auction bars are all about, and yeah, how we can use them with the key support and resistance levels, and how we can identify high probability setups like this. And yeah, the introductory offer is this indicator package that we have, plus Bloodhound Ultimate. And we also have some bonus specials as well. And the first being the session template handbook that we have, which will teach you all you need to know about how to isolate specific trading times where institutional traders are active. This is really important when you're trading a market dominated by local traders that have a strong tradition for using price data from the regular session. So that would be very important for interest rate and index and certain commodities futures. Although there is not pit trading anymore, the tradition lives on, and institutional traders will use the high and the low and the close levels of yesterday's cash hours to enter and exit trades for the current session. So it's really important that you get the correct price data for your charts. Secondly, you get the strategy template for with the parameters for defining reversal bars in the areas of key support and resistance that I've shown here today. And as I said, this particular template was developed and tested for crude, but can also be adapted to other markets. So here we see a backtest that I ran on this with a net profit of just south of 9,000, excluding slippage and commissions. We have a drawdown of about 1,790. This is since January 1st, 2015, about 200 trades. And this is for one contract using a hard stop and profit target 1 to 2 risk-reward ratio defined by a ATR calculation of the last 50 bars. So I guess you understand that there is no strategy that works for all markets at all times. Market regimes change, volatility changes. Still, this does show that we are working with a valid concept here, and that we're looking at reversal bars that show up in a higher time frame range and at key support resistance levels. And this is also traded during the regular session. I've kept Wednesday out of this as there's a lot of noise based on news releases on that day for crude oil. And as far as the introductory offer, we've put everything that we just covered, everything that we talked about regarding the auction bars, the institutional price benchmarks, the session template handbook, the strategy template, and Bloodhound Ultimate into a package to get you started. So normal price for this is just south of $1,500, and at a total price of $9.95, you get Bloodhound for next to nothing here today. Plus, you get the bonus specials, and you also benefit from future upgrades. So when NinjaTrader 8 officially launches, you will receive the upgrade for our indicators at no cost. So existing Bloodhound customers get an additional $300 off, so a total of $695 for the auction bars, the session indicators, the strategy template, and our session template handbook. Should mention that this is an introductory offer, so don't delay if this is something that you're interested in. And yeah, in these session packages here, we also have, apart from the daily Veve App and pivot calculations that I've shown here today, we have weekly Veve App and weekly pivots, and we have monthly, and you also have rolling calculations, so you can create trend filters that I showed here today. You then work with a rolling, let's say you take the last high and low points of the last 3 days for a pivot calculation, and then where the last session closed, and that will be a rolling pivot. And then you can do the same for the Veve App moving window. And yeah, I can just show this quickly in a chart. I'll pull up a new chart here. So we'll do a, we can do ES. And then or we can do NASDAQ for this. And basically, like I said, this is a moving window of the Veve App, and we then do not use a anchor point. We have a moving window of the Veve App calculation. And let's see here. Oh, it's doing tick, so let's just put this in a 5-minute chart. That will be easier to see here if we have a higher time frame. So here we see the rolling Veve App, and we use this as a trend filter. So when the price is moving through this Veve App line here, this is the 3 days average of the Veve App. Then we break through this, and we're in a uptrend, as you can see here. If we're just oscillating here within the first standard deviation of the Veve App. It's a ranging market. The price is not moving outside of this area, but once we start making higher highs and higher lows outside of this area, we can say that we're in a trending market. And you see here also a value area of the last 2-3 days. And so this is where the Veve App, the rolling Veve App was closing 2 days ago. And this is where it closed yesterday. So this is a good way of figuring out what the value is, if the momentum is increasing or decreasing. So up until here, we had the 1 day average closing below the 2 day, and then we see this changing here, and we have an up momentum that's slightly increasing as well. So it'll be interesting to see where the market goes from here. All right, and we can also add here the trend filter that I showed was included in the auction bar strategy template. And just quickly want to add this to this chart so you can see what that is all about and how it works in the chart as well. So if we go in here and choose entry, we will see that how I can connect this trend filter up here. So we had a rolling Veve App here, and we can connect that up to this, and then you will see that this is working as our trend filter here. So let's see, let's reload this. And well, maybe I didn't connect it here. Let's see, pull this back up again. Okay. Yeah, now you see it here. So now I have this one solver looking at where the price is traveling compared to the 3-day volume weighted average and of course you can choose different averages as well. If you go into the indicator here, we have the rolling Veve App, and you can choose the rolling period here. I have it set to 3 days. You can put 5 days or whatever you like, but for my style, 3 days is a good major trend filter. And then what we're looking for here are retracements back into this area for entries. All right, so I think I'll go back to the special here, and yeah, this was just to show you that we have a lot of stuff in these packages here. We have rolling pivots, the rolling Veve Apps, we have the auction bars, the handbook, and the strategy template in this. So a total value of $965, and you get it for $695 here today. So a pretty nice discount on this today. We also have a mini offer for the auction bars. If you have Bloodhound and some of our indicators already, so you then get the auction bars for $195. Very good value on that, and you also get the strategy template with that. So this will only be up for a couple of days, so please do take advantage of this if this is something that you're interested in. It is available over at lizardtrader.com/intro-deal. All 3 offers are located there. So I think that is pretty much what I had prepared for today. I usually sum up my presentations just explaining the background of what the LizardTrader approach is all about. These guys, the lizards, they've been around for a long time, millions of years, and I think it's because they've developed a fairly good survival technique So instead of running around chasing down their prey, they sit patiently, listening and looking and waiting for the moment when there is a opportunity to grab what's right in front of them. And for us as traders, there is definitely a lesson to be learned here. That is to have a clear strategy, to keep it simple, and to wait patiently for the opportunities to come your way. And the advantage of our setups is that they're really tuned into the fundamental laws of price action. And yeah, you just can't argue with the pivot and Veve App price levels. They are as close as we come to self-fulfilling prophecies in the area of technical analysis. So we're looking for reversal patterns that sink into these general trends that I've talked about here today. And yeah, we wait for the auction ranges to align with these price levels. And when we have a reversal bar set up, we look for price action confirmation, check the risk reward ratio, and enter with confidence. So to get started on this, head over to lizardtrader.com/intro-deal and take advantage of this offer before it's gone. And with that, I think I will like to wrap it up here. And as I said, I will get back to your questions via email after the webinar here. So if you haven't done so already, type in your question. Otherwise, you can also get in touch with us over at the website in our contact form. There is a little tab called contact there. And you can also get back via info@lizardtrader.com. And yeah, that's it for today, guys. Thanks for checking in. I hope it's been of value for you. And I look forward to welcoming you as a Lizard Trader soon. All right. Thanks again. Take care and bye-bye.